Today's episode is brought to you by Roosters, a noble grill in Winston-Salem, North Carolina. They provide an upscale menu of Southern food and dishes with international influences made from local ingredients. More info on them at the end of the episode.
Welcome to the Semmax Way, the definitive podcast for mastering finance, investment, and retirement planning. Prepare to unlock the secrets to financial success as we delve into lucrative investment strategies and provide expert guidance towards a secure retirement. With over 20 years of experience, Semmax Financial Group has been dedicated to serving investors, and through this podcast, we aim to empower you with the knowledge to maximize your savings and achieve lasting financial freedom the Semmax Way. Whether you're a professional finance enthusiast, a high net worth individual, or part of a sophisticated investment group, this podcast is tailor-made for you. And now, here is your host, Matt Landon, financial advisor for Semmax Financial Group and licensed CFP.
Dishonest money dwindles away, but whoever gathers money little by little makes it grow. That comes from Proverbs 13:11. I don't know if you are religious. I am. I am a Christian, and I'm not ashamed of it. But at the same time, I know not everyone is. Whether you're religious or not, I think that this is a verse that can apply to us all. We all realize and see and understand that dishonest gain is not going to be a good thing. We also have an understanding that whoever gathers little by little will increase it. I think there's a lot that you can take from that. This was something that was penned thousands of years ago, and it still applies today. If your income planning and retirement planning and your get-rich-quick schemes aren't working, there's a reason for that. You're not following the right principles. It is so much easier to take someone who has $1 million and turn them into a multimillionaire than it is to take someone who has nothing and turn them into a millionaire. I can't tell you how many people I've heard both personally and on different podcasts, TV, etc., who've always said the same thing. The first $1 million is the hardest to make. After that, it starts to come more quickly. Well, let me tell you this. Those who gradually acquire, little by little, they will increase it. That is where the wealth is going to come from. That is where that accumulation is going to come from. And that is something you see borne out in the stock market over and over and over again. It is not the guys that are trying to day trade penny stocks and just flip it and turn their $2 into $2 million in 6 weeks that are coming out ahead in the stock market. It's those of us that are investing day in, day out, that consistent, repetitive investing that ends up making the biggest difference. Now, this is something that started for me a long time ago. For those of you that don't know, I actually got my first job. It was under the table. I don't want to sound like a little rebel or a rule breaker here, but I actually got my first job working for a landscaping company in Winston that will remain unnamed. But the guy would actually pick me up from the office, or from the house, rather. And so what happened was I was homeschooled, and on Thursdays, I would actually get picked up by this guy. I would go and I would do a bunch of edging. I was working the leaf blower. I was working the weed eater, and I was using the push lawnmower while he was using the big lawnmower. And we were doing yard work. We did it all day. I did it on Thursdays, and it was good money. Again, it was under the table. I was not paying taxes on that because I was, again, 12 years old, getting paid cash by this guy to work. I saved a good portion of that check starting from the age of 12. And that's something that has stuck with me ever since. I've always put money into the savings account. I've always put money into a CD. But what's incredible is it's not the money that's sitting there being lazy that grows. It's the money that's being added to that's multiplying. And you can add to your funds both from the sweat of your brow, going out and working hard, and you can add to your funds by owning dividend-paying stocks. You can add to your funds by having bonds that are paying dividends, that are paying interest, that you're getting yield off of. So when you're thinking about your accounts and you want to see them growing, I think consistently adding to them is going to be key. Now, this is really appropriate, particularly in a down market, because in a down market, it's really disheartening when you look at your 401k and you go, man, I'm down $5,000 and I put $6,000 into it. Should I still be doing this? Does this still make sense? Absolutely. Yeah, it still makes sense because what's happening is you're buying on sale. Now, the value of those shares may have gone down, but we all know market goes up, market goes down, market goes up. It's one of those things. It's like the rolling of the seas. It goes up and down and up and down. And we're just kind of along for the ride, provided you're on the ride. Now, when we think about that, there are smooth seas. There's rough seas. I'm not saying everyone should be aggressively invested. I think how you have your portfolio balanced makes a big difference. We have this tool that we utilize at our office. It's a really cool software tool. It was put together by this guy who's got a Nobel Prize in economics, smart guy. But what the tool does is it actually assigns a risk to your portfolio. It can give your portfolio a risk score. And you can do the same thing with your stock portfolio, with your bond portfolio. It even has a risk score for cash. Well, I'll go ahead and tell you. Things are on a scale from 1 to 100. Looks like a nice, easy stop sign. Kind of tells you how fast you're going. Guess what cash is? It's a 1. You're not taking any risk there. It's in cash. Well, there's different kinds of risk, but you're not taking any investment risk. But if you got everything at a 99, man, that's going to be some rough seas, particularly right now. Now, I think you might want to have some money a little bit more aggressive, some money a little bit more conservative, some money totally safe. Do you have it in the right buckets? And are you adding to it? And are you adding to the right bucket at the right time? So when we think about this principle, this is something that I actually read in my devotions last night. And so that's why I'm talking about it today. It's something that came up and I said, this is a passage I've always appreciated and it just came to me today. I knew I was going to be recording this today. And so I said, you know what, let's kind of tuck that aside and keep it in mind. But that wealth gained hastily will dwindle. That's the ESV version. The NIV version says dishonest money dwindles away. Whether you take it as dishonest money or whether you take it as that get quick rich scheme, either way you want to approach it, the result of it is money that you're sitting there saying, okay, I'm trying to shortchange the system. I'm trying to get around the long way, trying to get there quick. Doesn't work. It's not going to work. It's no different when we're talking about investing and from a philosophy standpoint than when we're talking about running. Now, for those of you that don't know, I'm a big runner. I love to run. Really enjoy it. You do not get faster talking about running. You do not get faster thinking about running. You do not get faster buying running clothes and buying fancy running shoes and buying a special GPS watch. You don't even get faster by buying a gym membership. You get faster by running. The more of it you do, the better you get. The more you run, the faster you get. It's the same thing. And what's amazing is, it's funny, 80% of new runners end up getting injured. 80% of runners end up getting injured, just in general. It's a phenomenal statistic here, but it's true. 80% of new runners or runners in general are going to get injured at any given time. It is one of the most dangerous sports from a rate of injury standpoint that you can partake in. And the reason why is because most of us don't want to put the time in that we need. We want to get faster. We want to run further. We don't build the base necessary. We don't put that slow, consistent increase. You shouldn't be running nothing at all and 6 weeks later running 8 miles at a time. If you do that, well, maybe if you had a baseline of fitness and things, you might be able to get away with it. But your muscles can't handle that. Your ligaments, your tendons can't handle that. Your bones, everything's not prepared for that. And so what happens is when you try and ramp up too much, too fast, you get injured. And then you go backwards because you're sitting on the couch. You're not gaining fitness. You're losing it, right? And so whether we're talking about consistently putting money aside, or whether we're talking about consistently exercising, in both of these cases, little by little, you're going to grow. You're going to improve. I think you need to have a tailored plan put together when you are getting into more advanced levels of investing. I think that's really key. We get a lot of folks that come in and they just kind of say, well, how did you come up with this investment strategy, or how did you get where you are now? I've just been sticking money in there. Haven't been paying attention to it, just shoving money in there, saving, putting it in some target date funds. And I think that's a great place to start. But as you get into a more sophisticated or advanced level, you want to make sure that you are putting the time and intentionality you need into something. So I mentioned I'm a big runner. That's something that's a passion of mine. But I recently did my first ever half Ironman triathlon. It's a ton of fun. It was miserable. I loved it. I had a training plan. I didn't fully follow my training plan the way I was supposed to. Also, the training plan was one that I got off the internet. And part of the reason I kept changing stuff on it was just a general free training plan for run your first half Ironman, do your first 70.3. Well, it worked, but the issue was I was more advanced in certain things than the plan had, and I was further behind than it wanted me to be in others. So I started messing around with the training plan. But here's the thing. I'm not a personal trainer. I am not a professional triathlete. I don't know what I'm doing. And I injured myself. And I got disheartened. And I got burnt out. And I wasn't doing it right. And there was so much that went into that race that was not swimming, biking, and running. I did not know what an impact it has with the type of gear that you're wearing in that race. I had no clue how much of an impact it has when you're taking in sodium and potassium and the right amount of glucose and the right amount of carbohydrates and just making sure everything is in balance. How much are you drinking? Are you overhydrated? Are you underhydrated? You know, we all think about being dehydrated, not having enough. You're not hydrating enough. You're underhydrated. Did you know you could be overhydrated? You drink too much water? Yeah, that's a thing. It can throw your electrolytes all out of whack. There is so much unnecessary pain that I went through in that first race because I had not consulted a professional. Now, did I finish the race? Absolutely. Yes, I did. Very proud of myself. Took me 6 hours and 20 minutes. Could I have done it faster? Sure. Could I have done it better? Absolutely. Would it have cost me a little more to work with a professional? It would have. But I think what I would have gotten in value would have been fully worth it. And I think that principle of saying just a little bit, run just a little bit further, bike just a little bit further. Don't try and jump up that much. Take a deload week. Do the things you need to do to be where you need to be. Do your stretching. Did you stretch? Well, no, I didn't stretch, but I got in my 2 hours on the bike. Yeah. Well, I'd rather you do an hour and 40 on the bike and do 20 minutes of stretching. These are things I did not know. These are things that having a coach is going to make so much of a benefit on, because even some of the stuff that I did know, was I listening to myself? Was I paying attention to it? Probably not. Not the way I was supposed to. I told Kristen, I want to come back. I want retribution. I got to do this thing again, and I'm going to do it better. I got to improve. And I got to give my wife a shout out here, because Kristen went all over Wilmington supporting me in this race. She was taking videos and pictures and seeing me going into the water and coming out of the water and going onto the bike and getting off the bike and running. And it was just amazing. She was a trooper. I think she was about as tired as I was at the end, because she was going everywhere, being my one person cheering squad, right? My one woman cheering squad. She was amazing. And I'm so thankful to have her. But she even looked at me and said, I think if you'd listened to a coach, you would have saved yourself a lot of suffering here. And she was right. She was 100% right. Following a plan, paying attention to the details, it makes it better. Now, whether we're talking about doing an Ironman, whether we're talking about running, whether we're talking about financial planning, it all comes in together. I think a lot of times when people look at the Bible, they see a bunch of stuff and they see words that were written thousands of years ago, and this doesn't have any practical application to your life today. I disagree just a little bit. Look at Proverbs 13, verse 11. Dishonest money dwindles away, but whoever gathers money little by little makes it grow. Words to live by, things to hold true to. I think this is a little bit different than some of the other stuff I've done as far as podcasts go. I hope it's still beneficial for you. I hope you still take that principle away. It's not the one-time thing. It's the consistency that matters. I hope you all have a wonderful day. Thank you so much for listening. This, along with so many other things, encompass that overarching philosophy that we here at Semmax employ. We believe that life should be well lived. You should be able to focus on your life, focus less on your money. But part of that comes with knowing a good understanding of how things are set up having wise decisions, and having it set up with people that you trust. I hope you have a wonderful day. Thank you so much for listening. Take care.
Thanks for joining us for another episode of the Semmax Way. If you're not completely satisfied with your current financial advisor, give us a call for a second opinion. Please note that this podcast is intended for informational and entertainment purposes only. The content shared on the Semmax Way should not be considered as investment advice. It is always recommended consult your licensed investment representative and a competent tax advisor, respectively, for your fiduciary needs and plans. No statement contained in the Semmax Way podcast or made by its producers, sponsors, host Matt Landon, or Semmax Financial Group is a recommendation. Semmax Financial Group and Matt Landon are not responsible or liable for investment value loss of any kind from any action taken based on information discussed in the Semmax Way podcast. Any opinions or viewpoints in this podcast are shared for information and entertainment purposes only and are not financial advice. We do encourage you to conduct further research and seek personalized advice for your specific financial circumstances. Full disclosure available at semmax.com/podcast. Thank you for joining us, and we look forward to having you tune in for future episodes of the Semmax Way.
I'd like to pause a minute and just express our gratitude to our podcast sponsors, Noble's Food and Pursuits. This renowned restaurant group has been serving the community for an impressive 40 years, starting with Jim Noble's original restaurant, J. Basil Noble in High Point. Over the years, their passion for hospitality has flourished, leading them to expand into a diverse collection of 9 restaurants, a retail bakery, and a catering company. Today, we want to shine a spotlight on one of their beloved establishments, Rooster's A Noble Grill, which has been proudly open for 31 years right here in Winston-Salem. Now, Roosters is known for its commitment to offering a seasonally inspired, regionally cultivated menu featuring mouth-watering wood-fired meats, poultry, and vegetables. If you're looking for a delightful dining experience, they also host monthly wine dinners and provide live music on their inviting patio every Tuesday night. Now, make sure to pay them a visit at 380 Knollwood Street, and to secure your spot, head over to theroosterskitchen.com and make a reservation. Again, that's roosterskitchen.com.